Good morning. Happy weekend. I've had a big breakfast and I hope you did too, so that you're ready to get into some technical analysis. And yes, this week we were calling out that we were going to set up a bear trap into a bull trap. And yes, we do have a little picture here for you with our thumbnail saying, hey, this is an earnings distraction and we're probably going to see something like this. We're only about 12 hours off on that, so that is fantastic. But that was able to give good confirmations for the daily scale, and we're going to go over the more important confirmation that happened here, which was with volatility. So today, for Saturday, we do like to get into the bigger time frames, showing off that 2-hour divergence, showing off the 30-minute divergences. That's great, but we're going to do that tomorrow, so make sure you're subscribed. Today, we're going to get into the macro side and talk about what's going on and get you guys these monthly expected moves, just in case you missed it just a few days ago. So let's start off the video like we have been. This is going to be where you have the opportunity to just get these yellow lines on your chart. Okay, guys, these are the monthly expected moves. They were updated on Thursday night. Patreon members, if you need the monthly expected moves for all the stocks that we cover and the second standard deviation, those 95% zones, as this is the 68% zone, we gave you the 95% zone as well in case we go through something a little bit more volatile. But you can get that. Patreon links down in the description. We do see that we've had good confirmations. We do see that where we could end up is by these yellow lines by the end of August, maybe even mid-August. So 655.88 for the SPY. And we do have 608.28 to the downside for the SPY as well. This is very, very important to have on your charts. This is your opportunity to potentially pause the video and go get these on there. We're going to switch over to the Qs. The Qs for now, good confirmation on the divergence. And we do notice that we have 591.65 to the upside, 538.37 to the downside. Just so you're aware on YouTube, if we do go down to the second standard deviation, I will give you those numbers. Make sure you're subscribed. If we start to look like we are forming something that can break those levels, I will start to give you guys those numbers for free here on YouTube for the SPY and the QQQs. But I think it's important to start out where we really, really want to focus on. And I think that this is overall correlated more so with VIX. And so let's go over that signal to start off the day before we get into the SPY on the daily chart, before we map out what could overall happen here. And let's go over and do that right now. So as we go over to VIX, this is where we were saying, this is it. This is where it's a big moment, because a lot of people, they can do weird things. And that's just the market it's how the market is. Rich people and people in power will always be able to manipulate stocks in some way to trick you because they want to take retail money. That is the game that you are deciding to play. Once you acknowledge that, you can go forward and take into consideration, this is the game that they're trying to take against me, but if I understand their game, I can take a lot of the risk off the table. The important thing for last week was paying attention to scenario number 3, all of the divergences, and they are holding all on the MACD for VIX, all there on the VIX, and then they are holding here on the RSI from the original point. Now, this, once again, I want to make sure to say this because I'm already seeing YouTube videos trying to get you to click on them by saying this is the absolute stock market crash. We are going to go over in this video in a moment with the SPY and the QQQs what signal you would look for to potentially have it, where the probabilities can be up a little bit. But truly, 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 this is not a scenario where this is some kind of absolute major kind of top where we're going to crash by 50%. We have not seen that kind of information as of this moment. This right now looks like we could get a 7 to 10% correction. Okay, so I wanted to point that out early on in the video. These are not necessarily perfect signals, and normally at some kind of top, you will see great, great signals. Now, we can pay attention to those things later on once we get into weekly charts. For now, I think that volatility will climb for a long time, and we're actually going to talk about yields later on. The biggest thing that you need to know here is, even though with all the messiness and some of the signals for the SPY and the QQQs, they did still give those signals. They did exactly what we drew up in our thumbnail, just a few hours off. We do have the divergences on the daily scale for VIX. We have those divergences from the original point for the RSI, and the MACD showing all of them. So this overall just says to us, we should be looking for a correction, a retracement. And most people out there are already trying to get you to click on their thing saying, this is absolutely a stock market crash. I even clicked into some of those videos to see if they were honest about that and really think it will be. And it looks like that they are just trying to shout from the rooftops, we are going to crash. The more likely scenario here as we go back over to the SPY and get in the daily chart is that we are going to correct into September. And this will start to make a little bit more sense as we start to talk about yields after we get through the SPY and the Qs. So something we would look for here, how stocks like to behave. First of all, make sure you're subscribed because we are very likely to see some kind of bounce, potentially even on Monday, if we can even get it, as we went down to a 95% line on Friday. So for now, the structure to head down would be this level right here. The structure to head down would be to go retest and say, hey, let's go test that area to make sure this is the high. Then we're able to actually roll back down. Then by the time of OPEX, maybe we are seeing some kind of divergences towards the end of the month. We are able to see some kind of counter trend move. And then you actually see the place where we could potentially form a bottom down towards 590. Would that be a stock market crash? Most likely not. Will the news be telling you that it is most likely a stock market crash? They most likely will, but this is the highly likely area where we are going to shape up some kind of bottom. And if it wants to be lower, it wants to be lower. So how do I overall treat this? I say, okay, I have some trades that could potentially set up down to the monthly expected move. If we want to break through that and go to the second standard deviation, I can look for trades for a dead cat bounce there, a dead cat bounce here. And then what I want to pay attention to is where these monthly expected moves shift in, say, September, because that is where I will pay attention for some kind of bottom for this market. We do have potential for a roll into all the way into November, but that's kind of getting ahead of ourselves. I don't think that information is necessary. I don't think it's very helpful to you right now. We have to see how this market shapes up. So for now, right, as of August, you're just looking at 608.28 as a level to get a bounce from, and then we have to see if we get a roll past there. I did briefly just want to go over the Qs on the 2 hour because we do have the course sale up. It is my birthday month and we're going into volatility. Those are the two things. I always do a sale on my birthday month, and I always do a sale when I say, hey, we're going into extreme volatility, because a lot of people struggle with extreme volatility, and it's actually, in my mind, it is my best kind of market. It is the market that I'm able to make the most amount of money in. So it is a fantastic thing to learn about if you need to learn about how to utilize these ranges, how to utilize monthly expected moves, and how to understand divergence, because the Qs do have divergence here. They had a great confirmation. It kind of saw the rejection, then confirmed again, right back in, and you're part of the downfall of the Qs. So this is the stuff that we teach in the course. You'll learn about divergences, you'll learn about entries, you'll learn about management of trade, you'll learn about these ranges, you will learn everything you need to know to make money in any kind of market. And we even give you a strategy for when volatility is above 20. And if you look on the right side of your screen, volatility is above 20. The best part about this is, because it's my birthday month and we went into volatility, you get 90% off. I'm doing it for just $100. You can go get that down in the description. It is called the Full Technical Analysis course. The 2 hour divergences here, they were extended across, very squeezy, but we held the main points on the RSI and the MACD. We see that the daily was able to give us that confirmation. This is a big deal. And we're going to go back into the SPY and the Qs after we go over some things here, because we need to talk about weekly charts if we're going to see some kind of crash. The Qs for the moment, right? We're paying attention to our yellow lines. That's all we really have to watch for. The level where we would like to get a bounce from is potentially here now, unless more selling comes over the weekend, and we are going to be going down, down, down. This is the area where we would be highly likely to bounce. This is an area where you are likely to see some kind of signal for that bounce. So as of right now, you would say we are very likely to go retest the 5 and then head down to the monthly expected move, maybe by my birthday, which happens, I think, to be OPEX, which is awesome. And that's what we would be looking for. What I think we are looking for from there is some kind of counter move that then drops potentially back down into September expiration, where we are very likely to get a rate cut. I think we may have potential to make little divergences down here on either the 2 hour or the daily scale. But for now, if you want to keep it very simple, for August, we should expect the Qs to go down to 538.37. The only way that we are able to head back to the upside is if this daily chart can just whip back up and make a new high. We don't necessarily want to see a new high here. We want a test of this area right here, but we do not necessarily want to see a new high because that will wipe out a lot of divergences on shorter time frames, and that could raise the floor. Okay, and I want to go over this before we actually go into, say, the 10-year yield and things like that. We do have to go over some of those things today. If you would like to stick around for that, if you just like signals for the SPY and QQQs, hey, go enjoy your weekend. Go spend time with family. That is what is truly important. Okay, so for this, what we would overall look for here is, does the weekly actually confirm down? If the weekly confirms down, we can be open to deeper prices, right? We can be open to deeper prices. If that is actually able to fully go negative, like completely negative here, and we're able to say, start to dabble into these areas, I think that will be too deep. I think that is where the risk is higher of some kind of crash. But just because I say the risk starts to get higher doesn't mean that it's a higher probability that this is still going to be a regular, just mean retracement. Technically, if we go all the way down to this price point right here of about 490 and you turn back up, that will still be a bullish market. That's just how it stands. That's how good this run was. Thank you to the 2-hour scenario number 1. We have to say thank you for our previous analysis. That's made us some money. If the weekly turns down, the risk gets heightened. Does anything change? Does my strategy change? Does anything I do change? No, volatility is high. I'm still just going to use my strategy. I'm just going to stay aware of this in case I think, hey, volatility may remain for a longer period of time. But if this, say, curls down, the weekly is able to curl down, and then you see a daily divergence here, and this is down by that center line, what do you think is going to happen? Well, it's very likely that we're done and we're going to head back to the upside. That's the truth of it, and that's what we are going to look for and post in our videos so you stay aware of it. If we go over to the Qs, we can see that the weekly chart was able to find this higher point. If you go into the RSI, you're starting to notice that we're dabbling with some divergence points up in here. We've already been through the mean correction, so most likely this will be some kind of thing that can resolve itself. Maybe it wants to take care of this weekly gap a little bit lower. Maybe we see a September monthly expected move there, and we're able to break down, curl back up, break down again, and then we can start to base out in this market. If this does curl down, it would suggest, hey, there is some risk of crossing the center line, but you haven't done it yet. And if you cross the center line, it still looks like to me we could go all the way down into something like 430, 428 and still just curl up, and that would be a higher low, and this market might take off. I actually think that the market is going to absolutely like boom to the upside into 2026. Either in September, starting in September, or November if we want to extend out this correction. I don't think we want to extend out this correction, and that's why we're going to talk about in the next section the 10-year yield, because right now you are all probably hearing that the Fed refuses to cut rates. There's no way we're getting a rate cut, and now I have to show you some data. And this is great because we still have our previous notes on the 10-year yield. In a video we were discussing, it's not going to be this that affects the yields. It's not going to be this that really affects the yields. It is going to be tariffs. And what do we see on Friday? This still holds true. This was from like 2 months ago when we were like bottoming or something, I'm pretty sure. This was from a very long time ago, and you notice that this is still the thing that's going to matter. That's the truth of it. Now, the Fed, nobody in government wants this to turn up. We wouldn't be able to pay our interest. Our interest, you'd pretty much be like a guy that goes to Speedy Cash and never pays the bill. You would just see this thing go up. You would see people, the housing market would just, nobody would buy a home at this point. But you notice what happened on Friday. Everyone is talking about how there is no rate cut, there is no rate cut, there is no rate cut. And some people have been saying, no, the Fed has to cut rates. And you see the reaction from the 10-year yield here. The 10-year yield dropped down. If that curls up on a monthly scale, that is a very, very bad thing. So this curling down makes total sense. This is people either one of two things. Either the bond market is suggesting, hey, they have to cut because the bond market is usually ahead of the game on this stuff. They're like, no, they have to cut. Or these are people positioning like, oh, recession or depression or something like that. I choose the former. I choose that. I think that most of the bond market is saying, okay, we got to cut rates. These tariffs are going to be a problem. And you're actually seeing that proven in the data. So notice that as the news talks about and prints a million times, no rate cut, no rate cut. Oh, is there even going to be even a rate cut in September? Let's look at the probabilities. This is why I pay attention to numbers and charts. I don't pay attention to the news. As you can see, after this week, we are now at an 80% chance to get a rate cut in September. How many weeks now have we been saying there will be a rate cut in September? How many weeks now have people been messaging me, saying to me all the time, no, there's no way that they can cut? And how many times have I said, I don't care what you say, they are very likely to cut in September? Over and over and over. We were saying that when this was 40%, and I was acting like it was way higher than that. This is important. We have to cut. They are going to cut rates. Something is going to happen to cut rates. And you know how it is. They never tell you what they're going to do. You can like or hate Jerome Powell, but he's part of the problem too. And that's just how it goes. You can like or hate Donald Trump. He's part of the problem too. Everyone in government, everyone in power is very much so a part of the problem, or else the problem would get solved. If the problem is not getting solved, then they are for the problem. Got it? I like a lot of the things that the people are doing right now. I do, but at the end of the day, we're raising the debt ceiling. We're doing all these things again. So I am very critical of that. The important thing for you to take away from here is the rate is most likely to get cut in September. The last time we did see a cut, though, we kind of saw those rates actually climb back up. So we'll see how that goes forward. As we see, the dollar is able to drop off. The dollar had seen a scale up here, and now it is starting to drop off. These are all things that are reactionary to tariffs. People are taking their money back out of the US markets and the USD. I think that makes total sense. I think that the 10-year yield is more important to pay attention to at this point because a lot of people are talking about no cut. And if they get a cut in September when they're convinced there isn't one, they will celebrate that. And that is when I think we might see a boom into the end of the year, maybe even into 2026. Now, since you stayed till the end of the video, I'm going to show you guys one monthly chart here to keep in mind. One, you do have a monthly divergence on your MACD. You do have that monthly divergence on your RSI. This means one thing. You do not want the month to close below the 9, in my opinion. It can happen, but these are some indications that we could go through something more rigorous. What I think you are going to see is 2 months where you wick down, you wick back up, you actually go for another tag in September that's a little bit worse. You come down into a price point of about 575, maybe 560, and then you're able to see a nice reversal there. Overall, I want you guys to be aware of what my overall opinion is and what signals suggest. In August, we are very likely to, at some point, maybe after a little retest here, go down to 608.28. We are very likely to bounce from 608.28. This is your 68% zone. If it starts to look like we are heading down and not making reversal signals here, but instead just seeing a drop down and a dead cat bounce to go lower, well, then what we would look for is the 95% line. The 95% line is the second standard deviation. That is the next level we will look for a reversal signal. But is it over in August? Most likely not. We are looking like the probabilities that we just showed off at about 80%. They have dramatically increased over the last month from about 36%, I think, all the way to 80%. And now you're starting to hear people say that there is going to be no rate cut when the probability is literally the highest it's ever been for September. This is where I really want to pay attention, maybe even lower towards September, which means in August, we can look for us to drag this out, maybe come down a little lower and get a bounce so that we can go up into September where we start to fall down again. And I think this market will base out down towards a September monthly expected move. That is what it looks like at this point. You have lost the 5-day. You have lost a lot of your moving averages. You are down at critical levels. You look like a lot of these shorter timeframes are going negative. So make sure to join us tomorrow for the shorter timeframes. We do have these levels in purple. These change. These levels in red. These change. And we try to put these out for you guys every single night for the red ones. The purple ones are the weekly expected moves. So every single week, if you are someone who likes to take weekly options, maybe even day trade or something like that, or take 2-week options like myself, 2-week to 2 months, these purple lines are really good, and we give them to you every single Sunday, okay? Completely for free for the SPY and the Qs. And if you want to join Patreon, we give that information over there as well. I just hope that in some way this video was helpful to you, whether it was just to sit and enjoy looking at markets, or whether it was something that you could take away and something that you can take a note on and something that you can focus on over the next few days, maybe to make yourself a little bit better. I think that is fantastic, but make sure to do the important things this weekend. What is the important thing to do this weekend? It's not get my course. It is go spend time with your family. Go do something nice for yourself. Go appreciate nature. Go do something fun. Enjoy your life. Your life should not revolve around this alone. Your life is about the things and the people around you, especially the people around you. So please go spend some time with family this weekend and tell them I say hi, okay? Have a great rest of your day, guys. Peace out.